Yo. I didn't know if I was recording it. It kind of glitched a little. Welcome back to the channel. We didn't do a Sunday video yesterday. You know, I'm the best YouTuber. I always stick to it. I always do the YouTube things that YouTubers are supposed to do. That's what I do. I never say that I'm gonna do something and then don't do it. I always follow through. Hey, if you're enjoying this content, make sure that you drop a like, subscribe to the channel, and share it with your grandma. Okay? Because we all have a grandma. We all have a relative who has a big holding in the S&P 500, and I'm sure that they would be really interested in taking a look-see at what's going on in the market. And listen, your grandparent, she might not, your parent, whoever it is to you, they might not really believe. They might not believe in this stuff, but I advise you to show them some old videos. Maybe show them last week's videos where we broke down this midline, huh? Yeah, the distribution, huh? Oh man, I hope you guys had a good weekend. Let's take a look at what is going on in the market. So we are looking at ES1. We're going to take a peep at SPY, and I also want to look at SPX for a more macro perspective on what is potentially going on. Actually, let's just jump over to SPX, okay, so that we can hold this in our frame of mind. What I have up here is in red the 200-week moving average, in the 1 month, the 50-month moving average, okay? So that's 1 month candles, 50 times makes that orange line, okay, is the moving average. And here you can see that this is we're trying, bulls are trying to create a double bottom in this range, okay? Currently the 1 month moving average, well, the 50-month moving average is all the way down here at 35.22, and the 1 week 200 week moving average is at 35.99, and we are currently testing that for a potential double bottom scenario. This would be the bull case, right? And right now on this SPX daily, it does look like you're forming an inverted hammer look here to close, or that's a regular hammer. Look, hammers, either way, it doesn't really matter, inverted or whatever. They represent, they are looked to, and we haven't gotten a close here, so I'm not saying it's confirmed or anything like that. And also, that just candlesticks alone aren't a way to determine a bottom and top. You have to use a few different things, right? But hammers are reversals. So if you see it at the top of a trend, let me see if I can find one here recently, and it doesn't have to be like a perfect hammer, but you can see here that you have like an inverted hammer that occurred here on November 22nd, and that was indicative of the top of that local rally there before you had a reversal, right? So let's take a look here. So you're testing this. You tested it today for the second time in the past few weeks, and we are looking at the ES1 chart, which is the chart that we've been following most closely, just because we think that it has the best price data for you to be analyzing to really understand what's happening within the market. And we have this Fibonacci that we drew from the bottom of this move here on October 2nd to the top, where we triple tested this midline on October 5th. And you can see that we actually found support here at the 885 Fibonacci, which is also $3,600 on the nose, which obviously is going to be a key psychological level. So we're definitely going to want to throw a permanent horizontal line here, okay? Because we found a significant bounce here. This was this previous accumulation area that you had that occurred here, right? So this is going to be a key form of support. Let's actually look back historically and see if we've ever, so you can see back here, you kind of had some resistance, some range-bound trading. You broke through, you tested it once, came through, distributed it down, tested it again, and found it as support before you had your rally. This was back in December of 2020. So this was coming out of the COVID rally, right? Pretty much the last point of support that you verified that you verified before you had your continuation rally up over the course of the next few years. So let's take a look up close and take note of some of the things that we should be looking at to determine where we think the market is going to go. I'm going to tell you now, if you fail 3,600, okay, to me, if you fail 3,600, okay, maybe you come down, test this 35.72 for a double bottom. If you fail 3,600 on the bottom like this and you make a new low, it's gonna get crazy. Okay, you are going to you like in relatively short fashion. Okay, so anything bullish that I say in this video, I want you to understand it is with the understanding that you did not fail 3,600 and then retest it and create a new low afterwards. That is very bearish, okay? And that is where you can get this potential for a push down to our lovely magic green line that we've been watching on the channel for probably almost the entire year. Yeah, I mean, I would have established it once we made a new high here. So March of 2022 is when I started following this line. And that, I mean, that means like if you were to touch it today, which you're not gonna unless something absolutely insane happens, would mean that you would go down to 33.77, which would be like $330 to $340 SPY, which would be, you know, you might see a few news blurbs about it if that were to happen. And every day it's decreasing, right? So like the longer that this takes, if you do end up testing it, the lower the price will be. And at that time, I will most likely be very bullish. Now, I'm not saying I will be very bullish like tomorrow. It'll blast up, but I will say that it would be a good time to, you know, maybe pick up some shares and maybe wait, because historically speaking, it's done a good job of indicating that. Always have a plan, though. Always have a plan. So let's zoom in, look at some volume, try and get a determination of what we think here. Okay. Now you have this local downtrend here that you're testing pretty rapidly in short succession, and obviously it's correlated with the 707 fib, this 36.43 level, which I have said is a very key level over and over again on the channel. You're going to be testing this again, I believe. I don't think that you're going to make a new low without testing this first again. That would be a break of the downtrend. All right. So even if you pull back here, I do think that you come up like this, and then you're going to retest this downtrend. If you fail this retest and you break down through, that is very bearish. Okay, that is very bad. I will say that it does look like locally here, you should be experiencing some level of relief in the short term. This structure to me just looks more healthy and like it's asking for at least a relief bounce. And if we were to have a relief bounce, what would that look like? I would pull the Fibonacci from here, and I actually already did it. That's why you see a different color here. And I'd be looking for that 707, right? I would be looking for a retracement that pushes you. Let me get my little marker tool, because I kind of like the way that those look, my little brush. So let's just say you broke through here. Let's just say it happened here. Maybe even you drag down a little lower. You would see this sort of move occur where you would be testing these key fibs, and then maybe you could even have an explosive move up in this fashion, okay? And what does that look like? I mean, this resembles, right? This is a Wyckofffian sort of accumulation, sort of play that's playing out here. So this isn't anything that's outside the realm of possibilities. I will say that the sentiment is extremely bearish on Twitter. I'd say that retail is, on days like today, you got pushed down really hard. Retail's looking for the end of the world. We all know that retail loves the end of the world. Let's also draw a short-term bull trend here and assume that maybe this is a local bottom, because you know that if you come down and you test this trend, you're going to at least have a reaction, right? You're going to at least have some sort of bounce that occurs. So this is a potential structure. Now, you could see it push down harder, right? Here. before it does that. And it would still be a valid, and it correlates with this 382 Fibonacci as well, right? So that's kind of the 707, 382, that you have some correlation there that looks pretty nice. But overall, I mean, this move resembles, let me get that little curve tool. It resembles this sort of move, right? A little bit more than it does this sort of move that we were watching as distribution. And look, I mean, from there, it's a little bit harder to tell, but you do have good reason here to say that perhaps you will have that local relief. Now, from there, we'll have to see what the volume looks like, right? And you could get pushed back down for another test. That could be another distribution. And at that point, you would create this sort of downtrend, which looks a lot more... Oh, I didn't mean to do that. Which looks a lot more like sustainable than this downtrend. Like, this downtrend is not just going to go forever. I mean, it could. We've seen situations, obviously, like 2008, the COVID crash, those sorts of things that create those really crazy downtrends. But similar to how I was saying that this trend line was so unsustainable to the upside, let me make it nice and thick so you know which one I'm talking about. Maybe change the color of it. The orange trend line. Similar to how I said this was so unsustainable because it would bring us to like 4,700 by the end of the month. This downtrend is unsustainable because it would bring us to, right? If you just continued this downtrend, I mean, just as a thought experiment, just to give you an idea of, I mean, what is this? What is this date right here? Oh, we can't even go. We can't. Okay, I got to zoom out a little bit more. Quite the thought experiment, Dave. Yeah, see, this is the 20th, and you're down to 2,800 on futures. Look, I'm not saying that it's impossible, and I'm not saying that we're not in some sort of crash territory where some sort of flash crash could occur. But would you agree that the likelihood is against that? I tend to believe that. That's just the way that I view the markets, though. And I know some people just love the idea of big crashes and big moons, but I'm more of a, I like to think that institutions like to draw liquidity to the upside and downside along the way, and they don't, they only like the flash crashes when they see a really good opportunity to do so. And some people think that somehow the institutions are all at risk in this scenario, but I can promise you that the people who are controlling this price, they know they are creating the perfect scenario for themselves. And look, that probably means that some institutions do suffer and get closed down and get destroyed, things of that nature. But not every institution goes under in this market environment. Okay, some have control. So I'm not saying necessarily that you blow up tomorrow, anything like that, but I would be expecting a break of this downtrend and probably a test of this downtrend up here instead before you see any more dramatic downside events. That's the sort of thing that I'm looking for. And look, perhaps you could draw over here and you can find that apex of that key level, similar to what we did back here with this fib. Oh my goodness. Sorry, that was weird. Right? You had the apex of this downtrend for the midline that combined with the 707. Look, I'm just saying that, this kind of, it makes a little bit more sense for the price on October 12th to be around here, 37.20, than it does for a price to just like crash. That's my opinion, though, and it's obviously not financial advice because I don't give financial advice. And to be honest with you, I'm just a dude, okay, that looks at charts. I have some experience doing so, but I would not, your life and your family is like, you don't put it on what a guy on YouTube says, all right? You do your own analysis. Maybe take note of what I do here. Watch some people that disagree with me. Figure out what they think and come to your best conclusion and what you believe. Looking at the volume a little more closely here, I did tweet out some things here. So, down to the 5-minute chart, what I would say is this high volume down here for this sell-off is resemblant of a sell climax sort of event locally, just in this local little move here. You can see that you're starting to build out this, really popular inverse head and shoulders sort of look. I'm not the biggest fan of that sort of analysis, but you can see it developing there. And you can see that once you have this push up, suddenly bulls come to play. Now, what I would say that this looks like is potentially a buying climax, right? And it's really normal for you to have a slowdown in volume for this test, right? Automatic reaction. You have a sell test up here with lower volume, sell test up here with lower volume, and then you could have the potential for an up thrust sort of move, right? Back up to this maybe 618 level, and that would be a key level for you to be retesting. I'm not saying that necessarily has to happen, but it does look like that would be the nature of this move, in my opinion. So, to sum it up, I'm not like this super bull right now. I'm also not a super bear. I am leaning bullish in the very short term, okay? The next few days, maybe the rest of the week, that sort of thing. I'm leaning bullish, but if you invalidate 3,600 as support, I am going to have a hard time sticking with that conviction, and I would be actually looking for a more bearish outcome, a very explosive move for bears. And really what we're doing here is we're looking for what is the next... give me an arrow. Can I get an arrow? Where's the arrow? Like this. What is the next big explosive move, right? Like what is... Oh, that's a big arrow. I don't want to mess around with this chop. I'm trying to understand better where the next explosion comes from, right? Where we create a new test. And I think that it's most likely that this is the sort of scenario that you see play out. So I'm saying the same thing over and over again. Hopefully you're gaining something from the video. I guess we can look at SPY and reference it in that context. We did have this uptrend here in SPY that you broke below, you tested, and you failed. So this would look like this is, suggesting, but I do see, I like this sort of structure here as a bull. But it would suggest that since you failed this, you should at least come back down to retest this level before you're going to see more upside, okay? And this is down to the 5-minute chart, so this is really short term. Maybe even as soon as tomorrow, you could be finishing that out through futures and everything like that. But yeah, so we're about to get a close here. That's basically my feelings. Let's take a look at that ES1. Oh my goodness, these arrows are disgusting. I should have planned that a little better, I suppose. XXX Tentacion. Let's see. Yeah, I have a hard time seeing this and looking at it and not seeing, bears getting trapped before continuation to the downside. But again, I'm willing to have my mind changed. If you break 3,600 on ES1 and you retest it and fail it, that is pretty bearish, and it could get pretty ugly pretty fast. That would be maybe a good opportunity depending on the way that you're viewing the market. Wait, what did I come over here for? I came over here for something. Yeah, I don't know, man. Look. You know what I'm saying? Who cares? Yeah. Oh, yeah, the daily candle. That was the SPX daily candle. It doesn't look so much like a hammer anymore. You're getting a little push down here. Let's see what ES1's daily candle looks like now. You got like a little doji action going here, which dojis are like hit or miss. I really don't like to make like a big play on a doji because this is sort of an indecision candle here. Let's see what SPY's looks like. SPY. I know SPY seems to be a little bit more bearish than the futures. But again, we have been relying on futures primarily, and it's done well for us. We've been able to make some pretty good calls off of it. I mean, you could see here, you're going to get this close in 4 minutes. If you close around here, it's going to look like a reversally sort of signal, but that doesn't mean it can reverse tomorrow. Maybe it reverses in this sort of fashion, right? But you're looking, you see this big body at the top and then the long wick at the bottom. Typically what you'll see is like the candles will have these long wicks as you see like a reversal that's occurring. So this is just an example. Because basically it looks like bears keep trying to press the price down and bulls keep stepping in to protect the price level. So hopefully that's a good illustration. I know it's not candles, but you get what I'm saying. Like this is the body and this is the wick. Are you still watching? What's in your head? In your head, zombie. Have a great day. Oh, man, I talk too much. Oh, you talk too much. Do we stay for the close? Nah. You guys, yeah. Have a good day. Hug your dog, okay?